How's it going, everyone? It's Sam. I hope you had a great 4th of July weekend, and if you're outside the US, I hope you just had a great normal weekend. Today we are looking at Uber Technologies because they announced that they will be purchasing Postmates. So let's take a look at it. Uber is up about 7% pre-market on the news that they are going to buy Postmates for $2.65 billion. So if you remember a couple months ago, maybe just about a month ago, there were talks of Uber buying Grubhub, which is one of the largest food delivery apps. But today they came out and said that they're buying Postmates. So we're going to go through it today. I listened to part of the conference call as much as I could this morning, and there were some good questions that some of the major players in the investing space were asking. Different investors from some of the major banks and investing institutions, and they had some good questions, so we'll go over that. But first, I just want to go over this. So as we can see here, they are buying it for $2.65 billion and an all-stock transaction. So they're giving them 84 million shares of stock for 100% of their equity. Now, I read that they are going to still have the Postmates app. So even though they're purchasing them, the apps will still be different. I think that they don't want to alienate any of their clients or push them further away from buying it because they're trying to transition them to the Uber app. So they are going to be highly complementary to Uber Eats, they say. The food delivery just system in general is very geographically focused, so it's very different depending on what cities you live in, and we'll take a look at some of the major cities and how they break down between the different apps and the different businesses. But it's kind of interesting, so I think that they're going to be able to get a nice bit of market share. And they focused with a lot of the small and medium-sized restaurants, so I think that'll be good to kind of diversify into that group for Uber. Let's take a look here, because really to understand this, I think we have to take a look at what kind of percentages the ride-sharing business has between the different companies and who is the major player in the space. So you can see it's a pretty big business, and this has increased from, this is an indexed graph, so it started at 100 back in 2018, and now it's grown almost a couple 100%, so we're at about 375% now compared to 100% a couple years ago. So this is a business that's really taking off, and it's almost doubled here just over the last few months. So there's a lot more space for it. Part of that is the fact that we can't go to restaurants as much anymore, but this is also a nice play where if we have any more issues with the economy shutting down or anything like that, people still want to eat out, people still want to support local businesses. One of the ways to do that is through these food delivery apps. So as we talked about earlier, a lot of this is very geographically relevant, or it really depends on your geography, what app you use. So for example, New York City, 52% of sales are from Grubhub, and only a couple percent are from Postmates, compared to Los Angeles, where a majority is actually from Postmates and less is from Grubhub. And as you go down the line here, you can kind of see it's variable to a very high degree. But as we talked about, Postmates is going to be bought by Uber. And just imagine all this green and the red being combined here. And this would be a very significant portion of the market. So as we said earlier, Postmates is 8%, Uber Eats is about 22%. They're at about 30% of the market share now with this new purchase of Postmates. They spent about $2.65 billion on them, and Uber is a market cap of about $53 billion. So if you think about it this way, they were able to increase their market share by about 35 to 40% with the purchase of Postmates. So they were able to do that for just about a 20th of their market cap, if that makes sense. So about 5% of their market cap, they were able to go and purchase this other company that's going to increase their food delivery side of their business by about 40%. So I think this is a pretty good purchase overall. Uber still is not a company that has really become profitable, which is what stops me from wanting to invest in them more. So I am considering Uber, but at this point I don't feel like I really want to yet, just because I like investing in profitable companies. But if they start to become profitable, I'll definitely look at it. And I realize a lot of you might not feel the same way, and that definitely cuts down on some of the profits I could make from companies like Uber. But I'm willing to deal with that and willing to take that as of now just because I feel more comfortable with it. And that means that it kind of limits my downside risk investing in companies like Uber. But as we take a look at Uber's income statement here, their profit or their revenues have both gone up over the last few years, pretty significant amount here. And if we just go down to their net income is nothing to write home about. They're losing more money than they were before, but that's just because they're trying to get to scale. And of course, like we said, they are growing their market share a significant amount. So as we go over to their balance sheet, they do have a significant amount of cash right now. So they have about $9 billion in cash and about $1 billion in receivables, and they only have about $6.6 billion in current liabilities. Now, their ride-sharing service is going to be severely hurt from the shutdown and the fact that they're making everyone wear masks and people just still aren't comfortable wearing masks and just being around other people in general. That's really going to hurt their ride service. But this other side of their company, the food delivery, is growing a lot recently, which I think is definitely going to help them in the long term. I see this as kind of a dual action system where the economy opens back up, the ride sharing services go up or the ride services go up, and maybe the Uber Eats goes down a little bit because of the fact that more people can go to the restaurants themselves. But if the economy shuts back down, the amount of Uber Eats sales goes up and the ride share servicing goes down. And I think that's kind of that system where they'll both increase over time, but they almost work opposite from each other in the sense of the economy shutting down or opening back up or different diseases that come out or viruses and all that kind of stuff. Hopefully none of that comes out, but it's kind of a system where you can use one to hedge against the other and back and forth. I think that a lot of people don't really want to go spend half an hour trying to get to a restaurant, especially in some of these big cities when there's really bad traffic or maybe there's bad weather outside, so they'll just pay a few extra dollars to have it delivered. And just from the conference call, I told you that I listened to the conference call. It was pretty interesting because I don't know if I really knew this beforehand, but Uber Eats is trying to get not just into the food space, but they're also trying to deliver more household essentials. So kind of what Amazon's doing right now. They want to be able to bring you other stuff. So maybe they go to Walgreens and pick up cough drops for you or some bandages or something like that, and they'll bring those to your house. And they're talking about not just getting into food, but getting into more of that. So they're going to take you home, they're going to bring you food, they're going to bring you household essentials. They're going to be more like Amazon Prime than ever. The other question someone asked was, are you planning on going for further mergers? Or do you think the government's kind of going to break it up more just because of the fact that there are pretty large companies in this space and there are only a couple of companies in there, so they might create a monopoly or something like that? And Uber said basically it's hard to tell what the government's going to do, but it's a very highly competitive space. They realize that when they're looking at getting into essentials, they're getting closer and closer to some of those companies like Amazon. They're going to be competing with Amazon and other similar companies that are trying to do the same thing. But the market is just massive for this. When you think about not just the restaurants, but then also everything that people buy from different stores. If someone like an Uber Eats can deliver you something from Walgreens, and this is me talking about this now, not them, but if they could deliver you something from Walgreens right down the street, that's going to be massive. Think about all the places that you go just a few miles around your house that you wouldn't have to go anymore if Uber Eats just brought them to your house. I think that that would be quite a large business if people get more comfortable and more used to doing that. Now, I think another thing that's pretty interesting in this space is the fact that restaurants are having such a hard time right now because of the fact that a lot of them are limited capacity. They just have a hard time getting customers in because of them being uncomfortable being back crowded in a restaurant together. So I think that opens up kind of an interesting area of possibility because of the fact that a lot of these companies like Uber, like Grubhub, they have these long-term relationships with restaurants, and they actually have pretty decent-sized deals with these companies to deliver their food for them. So some of these different companies have relationships with different restaurant chains, and they usually end up getting paid less per transaction because the chain just is giving them so much bulk, and they end up losing money a lot of the time on this, but they're gaining so many clients and they're gaining such an amount of volume that it is pretty significant. When you look at some of these restaurants that have been doing business recently, a large portion of their sales have been turning into these takeout orders. And in times like this, where they are really reliant on selling their food because it's a hard time to be a restaurant right now. It's interesting because I think that companies like Uber or Postmates can either kind of up their price because the restaurants are so reliant on it, or they can just continue to pick up other restaurant chains and really grow in size because of the fact that these chains really need some delivery system right now because they are losing so much money and so much business due to everything that's going on. So let me know what you guys think in the comments below. I appreciate you guys watching. I hope this was a pretty good overview of the company. I wanted to get this out pretty early because I am making this the day that you're watching it. So I appreciate you guys watching through. Let me know what you guys think about this merger and this acquisition actually. And I look forward to reading your comments. I appreciate it, and I will see you in the next video. Bye.